What are buyers doing to make the housing more affordable with monthly payments? Well, today I am going to interview Jason Allen. He is one of the lenders that I work with here in the greater Salt Lake City area, and we're going to talk about just that. Now, if you have any lending and mortgage questions, I am going to put Jason's information up so you can contact him. It's going to be on the screen in the video, but I'm also going to drop it down below in the description. If you haven't already, make sure you subscribe to my YouTube channel and click the bell. That way you're alerted each week when I bring you new real estate related information like the video today. Hey, so Jason Allen, second time
Oh,
I've had you on YouTube, and we've
it's been a
talked,
minute.
yeah, we've talked about things. But since then, I mean, we talked back when it was what could you do for buyers to get their offer accepted because they were competing against 20 other people. And we needed you to close in 24 hours to win the contract type stuff. But now it's a completely different dynamic for buyers. And that is they're getting priced out of the market because they can no longer afford the high interest rate payments combined with the higher asking price of sellers. So, if anybody's in the real estate world or been looking at it, you hear things like doing buy downs, a 2-1 buy down, you marry the house, date the rate, things like that. So I wanted you on here today to talk to us a little bit more about what you're seeing and give examples to people so they can understand, to somebody that's not in our business, what is a 2-1 buy down? Why does this work and how does it benefit buyers right now?
Absolutely. FHA 2-1 buy down. And you know what's funny is I've been doing this for so long that I was really surprised when I started hearing this loan program kind of being passed around, or that it could possibly be an option. And what's funny is the kudos to you, because the when I watch videos of other realtors and other loan officers, I was listening to them and I was hearing it called everything in the universe except an FHA 2-1 buy down. It was the FHA 2-1, I'm not 2-1, but 2-1. I would hear all kinds of different names by real estate agents and by um, loan officers that haven't been in the business as long as we have. So kudos to you for calling it by its correct name. It is the FHA 2-1 buy down. So essentially, I'm just going to jump right into what it is.
Yes, absolutely.
So it is a loan program that allows the seller to pay a fee at closing that essentially buys down the buyer's interest rate 2% to start, so that their monthly payment is lower in the beginning. For instance, I'm going to give you an example. And I'm going to use the purchase price example of $500,000.
Okay.
So FHA deal, $500,000 price, 3.5% down payment. Let's say, as an example, this may not necessarily be what the rate is today, but we're going to use this number for just to illustrate how powerful this is. Let's say the interest rate is 6.75%. If the seller pays that fee at closing, it doesn't come out of their pocket. It comes out of their proceeds, just like any other charge would on their side of the ledger. They pay the fee. Now the start rate for the buyer is 4.75% the first 12 months. And then in the second 12 months, that rate is fixed at 5.75. So it graduates a tiny bit. And then in the third year and in the remaining years of the loan term, it's fixed at 6.75.
Okay.
The principal and interest payment on a $500,000 price with 3.5% down is $3,442.43. Okay, got that?
Okay.
When you drop the rate down to 4.75, that same loan amount For that first year, it drops to $2,768.54. It's over $670 a month lower.
Wow.
That's substantial. That's a car payment. That's almost a truck payment these days.
Yeah,
That can really be helpful for somebody.
right. Absolutely. So, and the idea with that and why people are saying you marry the house and you date the rate is because it's giving buyers a little bit more leeway, a little bit more time to like, okay, I have a place. Let's hope interest rates drop. And when interest rates drop before my 2-year buy down, really, your gradual 2-year buy down, I'm going to call Jason back up and I'm going to refi because interest rates are lower. That's the idea and the hope that people have with this
Right.
program.
Right. This loan ideal for people that are brand new in their job and expecting their income to increase over the next 2, 3, 4 years, right? But you get to start off at that low rate, allow your budget to acclimate to these increasing mortgage payments. I mean, ultimately, even if the rate was 6.75, if rates don't come down, and let's say they continue to go up, you're going to be pretty thrilled that you have a loan at 6.75% that's fixed for 30 years, especially
Right.
since you got that initial 2-year start of the lower monthly payments.
Right. So maybe hopefully you're saving up a little bit with what you are starting your loan at. So
Yeah.
so let's get an idea then because I mean, I work with buyers and sellers. So if somebody was going to do this, you said the seller pays the fee. What does that look like? Because it's going to be important to the seller to know what they need to pay, but it's also important to a buyer because they feel like, hey, they're not giving me X amount off the sales price, but over that time, you're probably saving more than the upfront. Let's just say it's $15,000. They're probably that interest rate savings is probably going to be very much more beneficial for the buyer.
Yeah. Yeah. So this is what we've all been saying since rates started kind of creeping up, is that it's better for a seller to pay this fee to buy down the rate for the buyer than it is for the seller to take a big old chunk out of their price by lowering it to try to entice people to buy. You end up netting less by lowering the price as a seller than you would if you paid this fee for the um, for the buyer. So a good rule of thumb, do you want me to get into the weeds of what that would look like?
Yeah, absolutely.
Oh,
Let's do it.
okay. So a good rule of thumb would be that fee would be 2.625% of the loan amount for
Okay.
the buyer.
Okay.
Okay, so in our example, that would be about $12,665 in fee that they would pay. But you can see the power that has to lower the initial payment for the buyer, from as a seller. Hey, I'm really making it easy for them to qualify, because the amount that you would have to lower the price to get to that point would be pretty substantial.
Right. Well, and that's what I was just going to say. Really, the buyers are coming out ahead on that in the sense that let's round up and say a seller dropped the price $15,000. Well, that $15,000 sales price drop is not going to make that much of a payment to a buyer. I mean, what are we talking about? Maybe $20 a month difference
Yeah, not that much.
versus 600 and something with the 2-1 buy down.
I'm going to do the number right for you right now. Are you ready for this?
Yep.
Your loan. So in this example, $500,000. Okay, I'm running my calculator right now.
$500,000 sales price.
$500,000 sales price. The loan amount would be base loan amount would be $482,500. Now, FHA does have an upfront mortgage insurance premium that we have to add to that, but we're
Right.
just going to keep it simple and just run a quick and dirty number here just to give you a concept of how it would look.
Right.
$482,500 would be the loan amount with 3.5% down. In order to make your payment be the same on that 482 at 4.75, the seller would have to lower their price enough that the new purchase price for the buyer would be, drum roll please, 441. You're starting off at 5, and in order to match that payment for the buyer, you have to lower the price to 440. That's $60,000 difference in price. You net that much less. Whereas if you just paid a $12,600 fee,
Yep.
you would net more money and the buyer would have a better payment.
Right. Yeah. That's crazy. So great options for FHA buyers that have limited down payments and all of that. And, I tell people all the time, and when we first start a real estate transaction, everybody laughs at me when I say this. And then by the time we get to the end, they're like, Melissa, you were right. I didn't get it when you said it at the beginning, but real estate is nothing but legalized gambling in Utah. That's all it is. So people don't understand that, but it really is. And that's the gamble that buyers are taking with a 2-1 buy down and hoping that the interest rates drop. So,
Here's what's cool though. Can we talk about their options for refinancing?
yes, let's do it.
Okay. So the reason why a lot of home buyers, especially right now, that are in the market that want to buy, if you have less than perfect credit,
Mhm.
this FHA loan is really easy on people with less than perfect credit. So if your credit score is lower, you can do this. Now, you're going to get a low fixed rate, an affordable monthly payment. You get to buy sooner than later. You got to pay to live somewhere, regardless of whether you're renting or buying. So it might as well be yourself that you're paying by buying. Now, let's say your credit score never improves over the next 18 months, 2 years, however long it takes for rates to get back 5 years to a less than where they are right now. When you get ready to refinance, when they do drop, if your credit is still less than perfect, FHA allows you, as long as you have no late payments in the last 12 months, to do what's called an FHA streamline.
Mhm.
No credit report required, no appraisal required, no income documentation required. We just make sure that you haven't made any late payments in the last 12 months. We lower your payment to the new lower fixed rate, and the little bit of fees that are required, which is basically your prepaid items, you have to set up a new escrow account. That gets rolled into your new loan anyway. So no out of pocket expense.
Right.
Okay. But let's say you're an overachiever and your credit score does go up, right? Because with monthly mortgage insurance, or with FHA loans, you do have to pay monthly mortgage insurance regardless of what your loan to value is. This is a whole other video, monthly mortgage insurance. But
Right.
suffice it to say that when you get to that 80% loan to value, when you owe 80% or less of what your home is worth, then you don't have to pay monthly mortgage insurance, which is an insurance that insures the lender.
Right.
Now, with FHA, you have to pay that for either the life of the loan, depending on how you started your loan, or if your down payment was bigger, you only have to pay it for 10 years, or until you reach 78% loan to value, whichever takes longer.
Okay.
Okay. So there's always going to be a monthly mortgage insurance factor, most likely with your FHA loan. But let's say your credit score goes up, you've got great credit now. Now you can do a refinance to a conventional loan, presuming the rate is makes sense financially. And if your loan to value is less than 80%, the monthly mortgage insurance goes away. If you're not below 80% loan to value and you still have to pay monthly mortgage insurance with that conventional loan, when you do get there, the monthly mortgage insurance automatically drops off.
Nice. Well, and let's talk about what, because I get people that call me that their credit score is just not good enough. So let's tell people, like, what credit score do you need realistically to get this? Obviously, you can't have a $400 400 credit score. So let's talk about that, because I guarantee you everybody asks what, if their credit is not perfect, what
Hmm.
score they need.
Yeah. So 620 is typically the lowest credit score you need to do to get in that 3.5% down payment area.
Right.
But we can do FHA loans down to 580, but it does require a higher down payment. And I believe right now it's 10%. So if you do have the money and you do have a lower credit score, because there are a lot of people out there that have less than perfect credit, and they just maybe made some mistakes or made some bad decisions, and now they've missed something. Life happened, right? Maybe there was an illness or something catastrophic happened and it brought their credit score down, but they still make great money and they still have some money in the bank. So we could talk about that all the way down to a 580 credit score. Ideally the higher the better, but if there is potential for credit score improvement after I've had a chance to look at someone's credit report, we can typically in a short period of time get their credit score up there so that they can benefit from home ownership sooner than later.
So
Exactly.
that's why it's important to talk to a loan officer to get your best information for your situation. And I've
Yeah.
told you that before. Like, when people call me and they have mortgage questions, I'm like, yeah, don't talk to me. That's not my field. Talk to Jason.
Same here, man. Somebody calls me and starts asking me real estate questions. I'm like, hey, listen, I'm gonna stay in my lane.
Yep.
You talk to Melissa, and I just want to handle what I'm good at.
Yep, I know. And that's how I am. I don't come to your work and tell you how to do your job. That's my philosophy. So, anyways, awesome. Well, anything else that you want to share with us today about what buyers can do if they're kind of thinking, I want to do this, but I can't afford it? The 2-1 buy down is huge.
I would say more. I want to go back to what you were saying in the beginning, and that is if you want a home, if that is your goal, there is hope for that to happen. And the best time to do it was not, 2021 or the beginning of 2022, when sellers were really being, you know, business people by trying to make the most money they could on a product they were selling,
Right,
but they were really making it tough on people, and because we had so many buyers, we had so many offers per property.
right.
Now it feels like we have more properties on the market because rates have gone up and they're sitting a little bit longer,
We do.
but we have sellers that have equity. This is such a great time for a home buyer because when you have a seller that has equity, they have options to help the transaction get closed. And by that I mean, if they have $100,000 in equity and they want to, and it takes $12,000 in fees to help a buyer get into their home at the best possible price for the seller, that is a really good position to be in. Melissa, what if we had all these sellers with no equity, and the buyer needed them to buy or to pay rates or fees for them? That'd be a terrible point to be in because we'd really have a lot of us, we'd have a stagnant real estate market.
And
But right
short
now,
sales.
yes, but right now we're in a position where the sellers can help, the buyers can get into a home, because when rates go down, and they will go down because what goes up
Must come down.
must come down. And when they do, all of these home buyers that were priced out because rates jumped up a little bit, they went to rent somewhere. It's not like the Avengers where everybody turned into dust and blew away that wanted to buy a home. They're still here. And when rates come back down, what do you think those renters that wanted to buy in 2021, what do you think they're going to do?
Right.
They're going to jump back in, they're going to be on the hunt, and then sellers will no longer be making concessions for the buyers. So if you need concessions, you're short on cash and you want to get into a home, right now is like the golden hour to get into a home.
So, it is a great time for buyers.
You got
because
lots of selection for sure.
sellers are definitely needing to move their property. They have way more competition, and yeah, they're going to have to get creative. And this is one way that buyers can ask for sellers to get creative to make things
Yeah.
affordable and move their property if they love a house. Well, thank you for everything that you shared with us today. I am going to put your contact information on the screen down below here so people can get in touch with you, talk to you, find out.
I wonder if they could scan my. I wonder if they could scan the screen and get my contact info.
Viewers, hit pause on his shirt, go back. Let's see. That would be interesting. Let's see if that actually works.